Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 15th of May, 2025, just getting on to 6:20 p.m. Central Time. I'm not in a hurry tonight. I was last night. My wife had me go to one of these fancy affairs, and I hate them. And, you know, everybody was very nice. The meal was phenomenal. 5 of the best chefs in the city. This was a tasting from them, and it was phenomenal. But you know, I can eat a McDonald's. All right. Really, I love barbecue. That's my favorite. All right. So today we had massive amount of data. Nothing came out of jobless claims. They're running about where they've been. No big surprise there. The PPI was the surprising number today. What we're seeing on the PPI is one of the worst drops in it in 5 years. And what's happening is the manufacturers, the producers, are eating a lot of the tariffs. That won't go on too long. They're going to have to pass it on. They'll eat what they can and then you go. But we're seeing the impact. And remember, we were all worried, when would we see the impact? And we're starting to see it. I was watching again the director of the Los Angeles port, and he is absolutely convinced. The ship counts, number one, haven't gone back up dramatically in any manner. He does not see that things are going to get a hole. He thinks there'll be a hole in certain products, and we'll see what happens. You know, it's nice that we're all analysts and economists and we can look at it, but this is the guy looking at the port, running the port. And I want to go by what he is saying. I want him to tell me that, no, that traffic has really picked up. There's been no dent in it. I'm not hearing that from him, and I want to hear that from him. In the stock market, the market that got hit, and I was concerned with it last night, was the Dow Jones. And UnitedHealthcare is just a stock that was recently $600. It's in the 260s. I mean, this is a stock that could go back to the 200 level. They've been hit, or let me say it the right way. They're being investigated, and they're not guilty. They're being investigated for fraud charges, and to an insurance company, Medicare fraud and all that, you're talking they'd be banned for 5 years. Bye-bye, baby, if that's the case. So that could be a very serious issue for them. I'm not saying they are guilty. I am saying they took some big charges. I am saying the big boys are gone. They've abandoned ship, and they've brought in the old CEO to run and straighten out the ship, and he's did a good job first time around. You know, Bob Iger's done a great job with Disney, so you bring back the older guys that know how to do this, and sometimes it works. Sometimes it's just too much of a mess. We'll find out soon enough. But that scared me because last night I had told my clients to buy the market. And, of course, I woke up to that news, and I went, what the heck? I could have just easily bought another index. Well, it turned out to be one of the better buys, all right? The market shook it off, and it's thinking as I am. That doesn't mean that you're not going down, and it doesn't mean that you might not see that UnitedHealthcare comes out of the Dow Jones and gets replaced with something else. They'll only put up with it so long, and if it's too much of a weight on it, then it's not a fair weighting because of how many people have to own that for the portfolios that run on those. All right. When we look at bonds and notes, we saw for the first time interest rates actually fall, as now the market is seeing the impact of the tariffs. And that's what I think happened. The psychological part, and I didn't say it's a trend change, the psychological part is we've all been saying, where is the impact? We started to see it today in the PPI. The gold market has done a successful test for the moment of the 3,200 level. The dollar, it's at a very precarious position. We might as well take a look at that in a minute. And tomorrow morning, what we're going to get are housing starts coming out. They're looking for the starts to go up. This is spring. People bought already. They're looking for that, but they're not looking for the permits to be up. We will find out the foot traffic. If you saw the housing index come out today, was not good. That fell 6 points. And the builders are saying they're not getting the foot traffic. Of course, nobody can afford it. You got interest rates 6, 8 on mortgages or something in that area. 30% down. What's the average guy make? It's rough. U.S. import-export price data, I think it's going to come in a little bit on the soft side for both. University of Michigan prelim, I think it's going to shoot up. Think about it. This is May. In April is when we had the tariffs go on, the tariffs go off. We've had 2 deals, 3 deals made by President Trump. We're getting big orders coming in on different companies, which isn't in that because he's just accomplished those. But the mood is better. And that's how I think you have to look at it in the morning. So let's go, if we could, and take a look at what's going on. When you look at the E-mini weekly, look at how the market has come back up. Remember, I was saying here, this is your resistance zones, but that's pretty easy to call. I thought this was going to be more resistance than this. And the market, it's at the high of the week so far. It stuck its head out. And that'll mean on pullbacks, 57.63 will be support. If this market were to close just this way for the week, that would be an interesting chart, I'll tell you. What you have here, you can see you've gone up. I labeled back here April 7th, and I said that was the panic low. That is when, if you'll recall, the bond market went to 5%, and we were hearing about all the tariffs, and they were on. And then the president removed the tariffs, and the market went away. All right. Those tariffs aren't gone. He hasn't negotiated anymore. Keeps talking about India wanting to go to 0 tariffs with them. I haven't seen him make a deal. Let's make a deal. You got to keep feeding the bull. If you don't, and people start looking at it, they'll go, well, how are you going to get anything done by that July timeframe? You're already halfway through May. And that is going to be a big issue for this whole group that is running this administration. When we look at the S&P, well, you're coming back up. You're nowhere near the high. I want to make that clear with you. But you certainly have come back up a long way in the market. You're trying to stay over the 100-day and the 200-day. Generally, the first test of it doesn't do that. So we will see where you're at. The Bollinger Band's right above the market at 59.32, and you have an embedded reading. That's all powerful. Let me come back here. You see the embedded reading. It's powerful. In the NASDAQ, you have the embedded reading. Same power in the market. I was flipping a coin in my brain. Do you buy the NASDAQ or do you buy the Dow? And I flipped the coin. It was the Dow. It could have gone either way. I didn't want to have both last night going into all that data. As it turns out, market came up nicely, still embedded reading. I can make the argument to get up here into the, what would that be from where you're at right now? The 100-day average looks like it's 42,700. So that'd be about the level that I'm looking at, and we'll see if it can do that. What I would not want to own, and it's flirting with danger, is the Russell. If the markets back off on indices and that joins it, it will lose its embedded reading. It's got to hold on. But I also think it's going to have a nightmare trying to get through the 100-day average and the Bollinger Band. It just doesn't have the right mix of companies in it. About 40% of those companies don't make money. Then we go to my friend the DAX, which is right here. And remember, as it came up to this zone, I think it was right here I started saying it, I thought the pros were going to start taking money off the table. Now, yesterday was danger time, and I mean big danger. Let's see if it'll let me come back on it. I don't know if it will or won't. There we go. That's what I wanted to do. Yesterday, you finished at 80.27. You had to go up a lot today in order for this market to get firm sounding, and you did it. You went up, as you can see, 50 points, and you've turned back the tide. It's at 88.43. It kept it. It's embedded reading, but it's the first sign of weakness showing up. Any move now over the low back here is a problem. The market did take out an outside day downs high. I would think that if you had a stop under the lows of yesterday, not today, that's where I think the pros are going to put stops and call it a day and see what the market can do if they're not already out. Got it? Where did we go in the 10-year note? Well, yesterday and today we were down to the 100-day average and the Bollinger Band. Today you made the lower low, came shooting back once the data was out. You're not out of the woods by a long shot. You're trying to embed. If this market gets several days where both numbers are under 20, then it turns again into the sell mode, which means higher interest rates still here. Same thing in the 2-year notes, except they're embedded. So what the market is saying is Congress, with all these parts that they have moving. They want to get by Labor Day, as you know, the bill out of the House and get it to the Senate. This thing's going to have a nightmare in the Senate getting through. You know, the New York, New Jersey, California congressmen are fighting for their constituents, and now they want to see the SALT go up to $80,000. I'm sure there'll be caveats within it. Why would you give $80,000 to somebody that earns $10 million a year? I'm just making this up, but that's it. On the other hand, if you're giving it to one, why not give it to all? There's going to be a lot of negotiation going on here. Not only on that, the Social Security, they are going to give the brakes on the Social Security. Where's that money going to come from? It's not for everybody. It's if you earn a certain amount or less in order to get no tax on your Social Security, which I think that, you know, that's fine for that level of the market. You still have to pay for it. Nobody's told me where the pay's coming from. The 10% money that the tariffs are bringing in, we know it's about $100 billion. What does that do for us? I just don't know. Where are you going to get trillions? That's the word you have to get to. In the dollar index, higher lows, higher highs. The market's got a problem here in that it got overbought. Now, here's how I'm reading the dollar. If we take out the lows of yesterday, Wednesday, that could give you then the pattern of lower highs, lower lows, and set you up for another test of 99.80. So what you don't want to see taken out if you're a dollar bull is that. I'm not a dollar bull. I see the trend is up, but I see the market's overbought. Anytime I see a reading over 74, it's a filter to me that says don't deploy new money in that market on the long side. In the eurocurrency, this market's been in a downtrend. If it takes out Wednesday's highs, I think it gets back to the 18-day average. So tomorrow's a super important day in those particular currencies. Remember I was saying I've got the funniest signals. I've got a signal on the weekly chart that I should be buying right here, the British pound. I have a signal on the daily chart that you should be selling right here in the British pound. I mean, what do you do when the two fight? This is what you do. You take your thumb and you don't do a darn thing. There's nobody putting a gun to your head. In Bitcoin, you keep coming down and trying to lose the embedded reading, and you haven't done it yet. You've also not gone anywhere in a little bit here. Today you came down for a new break low. If you take a look at what you got to today, you got down to the 101,695 level. As I told you, I took traders out of this in the futures, but I kept them in IBIT, which is the Bitcoin Trust. And it is easier right now to play that than this because you're going to give up too much money in this. Then we get to the energies, and you've had the run up, and now you're coming back to rest at, what do I call the red line? Everybody. The line in the sand, where it comes back to see what should it do from that level, because it's from the 18-day average that markets make decisions. Look at the rally here and where you fought and then you broke again, where you came down. Are we going to get another rally out of this? Can't tell, but it's certainly still in the bull camp. It is overbought. WTI in the bull camp, overbought at the line in the sand. Gasoline, I'd like it to break so I can get you into it. I do believe this market can go higher, and I'm not going to discuss what I put out in my natural gas. I want you to go to my special report. So all you have to do for that, remember, it's only up for 3 business days. So look at it. I mean, it's going to be going on you before you know what's going on. Over the weekend, we don't count those as business days. And what I covered in this in great detail was I gave you both the Season X charts and the more research and what they are showing both in 5, 15, 25-year periods. And then I gave you the price counts because price counts have been working in this market, and it's something that you want to see. It's all natural gas, but both the ETF, both the inverse ETF, in case it's long or short, the inverse, 2 times inverse, and of course the futures market. Just go to iraepstein.com. When you look at the page, you'll see in the top left, click the green, that's the report. There's also an icon up here. And if you're on YouTube, you'll see a circle with an eye. Give that one a click. I'm Ira. You have yourself a good day. I'll catch up with you in the ETFs tonight that I didn't put out last night. And, of course, in the morning, flash updates. Take care.